welcome back. Michael Harding here from the Academy of Financial Markets. I'm your Chief Trading Instructor. In this lecture, I'll be showing you the different types of trading sessions that happen throughout the day. Now, there are four main trading sessions that go on. There's the New York, Tokyo, Sydney, and London. Okay, so the Forex market is open 24 hours for 5 days a week. It's closed on the weekends. And in Eastern Standard Time, the market closes Friday at 5 p.m. and it opens back up again on Sunday at 5 p.m. as well. Okay, so sometimes when we see gaps in currency pairs, usually that's only from a Sunday gap because the market was closed. Now, in stock trading, sometimes when you see gaps, it's sort of a significant clue as to what might happen with the particular stock. For example, if we gap upwards, that sometimes tends to mean that there's a lot more bullish momentum in the marketplace, and we might expect some continuation to the upside, and vice versa. Gaps towards the downside with stocks, that might mean we might start to see some negative price action continue with the particular stock. But with currency pairs, that's not how it is. With currency pairs, whenever we see gaps, it's usually from a Sunday gap. So for example, this small little gap here, if you guys can see that, let me just zoom in a little bit. So this little gap here, okay, that was a Sunday gap. Okay. So let's just go back over and take a look at the different time sessions. So London goes from 3 a.m. until 11 a.m. Eastern Standard Time, and there's an overlap from London and New York. So New York starts around 8 a.m. and goes until about 4 p.m. And then there's the bank clearing hours, which are from 5 p.m. until 6 p.m. So this is an hour when you shouldn't be trading, because you'll notice the pip spread for a lot of currency pairs has widened out. So right now the spread here is about 2.5 pips. During the clearing hour from 5 to 6, you might see spreads widen out to as much as 10 pips. So if you are trading at that time, you don't want to just look at a certain pair, think there's a great opportunity, go in, hit new order, and then hit buy or sell at right away, because you want to pay attention to the sort of spread at that particular time. Okay, so that could be something that might set you back a little bit, especially for newcomers. Okay. The other thing with these Forex trading sessions is that there's different sort of types of personalities. And, we have to understand the players that are in the marketplace in these sessions. So at times, there might be major banks, major hedge funds, major firms, retail traders. We really need to understand who's in the marketplace at that particular time as well. There's a lot of economic reports that come out throughout the day, and these reports could impact the market in a very significant way. So this economic calendar I just picked up from investing.com, and so it actually gives us some reports that are due out later on today. Actually, there's API weekly crude oil stocks coming out, and the two bulls basically represents the importance. So when there's two bulls, it means that it's medium volatility. And when there's one bull, it's low volatility. But then when we have three bulls, it's very high volatility. So for example, when we saw the UK construction PMI, that's high volatility, and that happened at 4:30 a.m. Eastern Standard Time. So at 4:30 a.m. Eastern Standard Time, we only had the London trading session open. So that report was still very volatile, but you can imagine when a report comes out when there's the overlap from London and New York, and there's a lot more traders and players in the marketplace, that the market could be very whippy. It could be very unpredictable. Some firms or traders are looking at reports differently, and they could be executing heavy positions. So that's something that you want to pay attention to, is the time of day that you guys are trading. Get into some sort of consistent habit of when you are placing trades. I remember starting out, I didn't really have some sort of routine, and I would just basically trade whenever I felt like it. But it's important to get into a routine and keep a log of when you're trading, because there's, like I said, there's different sort of personalities in these trading sessions, and you really want to get to know the market as if it's sort of like a human being. Okay, so it's a lot of market psychology here. Okay, so you have to really understand how these players are thinking, to protect yourself. Okay, so that's it. Those are the Forex trading sessions. In the next session, I will go over some basic risk management to protect your account. Thank you.